Don't get complacent with these trends in the Forex market, because based on the charts, we could see some reversals take place next week, especially with the US-Iran talks over the weekend. So in today's SMC Outlook, I am sharing my game plan for the DXY, the Euro, the Pound, and also gold, so that you can make sense of what's happening out there in the markets. So my name is Justin Bennett, full-time trader and founder of Daily Price Action. As always, all of this is my opinion only and not financial advice. So looking at the DXY first, I want to show you what's happening on the monthly time frame first before we get into anything on the daily or even 1 hour charts, because I talked about this on Friday. However, the thing here with the DXY, and this is what a lot of people are ignoring right now, is that this market is still holding on to the support. Now, I know you can't see it because of all my labels. I'll zoom in here in a moment. But what you can see is that from 2011, basically, this has been the channel that the DXY has moved within since this point back here. And what you'll also notice is that over the past few years, what we've had here is lower highs and lower lows. However, this is in the context of this uptrend. Now, you will note that we do have a high back here, and this could be a lower high. So I will note that, okay? However, at the same time, if we move in here and zoom in, you can see we're on the monthly time frame. The DXY is technically holding on to this. So really ever since back here, okay, so going back to July of last year, the DXY has found support in this area, right? Every single time we got a wick below it. However, the monthly held on to it. And so far this month as well, right around 97.5, that is going to be the line in the sand, this level that goes back to 2011. So yes, we are holding below all of these lows back here, which, you know, people have noted out there. And I agree with that we are holding below these lows. So technically this up here is going to be resistance. However, at the same time, again, you can see where the market is holding on to that 2011 channel support. So as long as that's the case, I am not bearish on the US dollar. And furthermore, another point to this, and this is more SMC related, because what I just showed you is really just a channel. It's a key level. It's one level in the market. It's not enough to really base a decision or at least have a directional bias off of. And for that, when we look at the daily time frame, you can see where back here in 2025, we had the market moving lower, lower highs and lower lows. We then had this break of structure right here. So on this close, we took out both of these lows. So what this meant right here is that sellers remained in control. Now, once you have a BOS like this, you can also take the external high, in this case, these highs up here, and any close above these gives you a change of character. Now, that change of character tells us that we could be going from a bearish trend like we saw back here in 2025 into a bullish trend. Now, I say could be because there are no guarantees in trading, and the same thing applies with SMC and a change of character like this. But you can see that clearly back here off of this high, we did get a close. Okay, two closes, in fact, above here. And you can see the same thing on the EURUSD. It was even more obvious on the Euro, in fact. So this right here, as long as this is the case, okay, and we're holding above this low down here, I have to respect what is on the chart. And what is on the chart is that 2011 channel support and also this bullish change of character on the daily time frame, okay? So that's a fact of the chart, right? We can't really argue that. Nobody can argue that the market didn't close above this level right here. Now, just because you get this change of character though, this right here does not mean the market is immediately bullish, because I say this all the time, but bullish and bearish are not synonymous with buy and sell. In fact, when you get a change of character like this, the best thing you can do is wait for the pullback, because you get the pullback down here into discount meaning anything below the 50%. So this red line right here is the 50%. And you can see where we did dip into discount last week. Now, furthermore, a couple of key things happened here for the DXY as well. So this right back here, you can see this was a gap. So if I move into the 4 hour time frame and go back here, you can see where this was a gap. All right, so the market gapped up from here. Now, from that close on this 4 hour candle, what you'll notice is that last week, we actually bounced right there from that gap. Okay, so the DXY came down here, it closed the gap here, and now we have two internal BOSs on the downside. So that's from last week's drop, right? So we have the market moving down here into discount, we have it closing the gap, and we have it giving us these internal break of structures. Now, this is going to be key going into next week, because what this means is that this high right up here, so right around 98.3, these are going to be the highs that if we see the DXY take these out next week, then we have a change of character here on the 1 hour time frame. Now, that could be key. In fact, this is the 4 hour time frame, but really 1 hour, 4 hour, you'd have it on both, okay? So that would be key, because then you have pockets of imbalances like this back here, and specifically this one up here. Now, another angle of this here is if we zoom out and take a look at this change of character. Okay, so let's look at this right here because this is technically a bearish change of character. Now, this close above this high occurred on the 1 hour time frame. So this is technically a 1 hour change of character right here. But what's key about this is that if you look from this high, okay, so this high right up here, down here to this low, assuming this is the swing low, if this is the swing low and we get the market taking out these highs right here to give us that swing low, then the target becomes pretty easy, right? You can see the 50% right here. However, you can also see this imbalance back here from the DXY. We got the gap down. This right here is also an imbalance. So basically this entire area around 99.5 becomes my target if we get the market taking out these highs. Okay, so in my opinion, that's what's going to be key. 98.3, get above that. We're looking at 99.5, possibly that 100 area. Okay, so that could be a near-term bottom for the DXY. Now, it doesn't mean that it will be the bottom for this market. But I do think, like I said, I do think that if we get the change of character here at 98.3, then we're likely headed up here toward this area up here in premium. Okay, so even that right there could be a nice little trade next week if we get the setup. All right, so that's what I'm looking at from the DXY, guys. And if you follow my videos too for a while, you know that I've talked about this area down here. You look at this on the daily chart. I've talked about this area down here a lot because what you'll notice is that following this change of character, this area back here was a massive imbalance for this market. Okay. And I even said, I believe it was last weekend's forecast or outlook video where I said this gap down here, the ideal scenario would be a close of that gap. And that's exactly what we got. It bounced right there from the gap. So now I just need to see that change of character and then a move up here toward this imbalance from the DXY. Okay, now obviously we have a lot of headlines out there, like the US-Iran talks over the weekend. Personally, guys, while I would love to see a peace deal, I mean, seriously, love to see a best case scenario. I'm not hopeful based on the headlines I saw on Friday. A lot of contradictions going back and forth. Basically, everything Trump said was just completely contradicted by Iran minutes later. And that's been going on now for really days and weeks. And we all kind of know that Trump has a history of that. So I'm not going to get into the politics of it. But as far as whether or not I'm hopeful of a peace deal, I hope we get one, guys, but I'm not expecting it, okay? I think it would be a nice surprise if we got one, but I don't think that it's in the cards, at least not for the next few days. I could be completely wrong. I hope I'm wrong, but that's kind of my view on that. But I don't trade fundamentals, guys. I trade 100% charts anyway. All right, so let's move on to the euro. And by the way, guys, if you want to see exactly how I trade, including trading with SMC full time, check out the link right here on the screen. That's going to give you a free SMC course where I walk you through step by step my exact strategy for trading full time. And this is content that you will not find on YouTube. And then beyond that link too, if you want to join us in Discord for my help with your trading, including seeing my trades live and also trade setups throughout the day, then that is available beyond the link right here on the screen. Okay, so if you saw my videos last week, I talked about this on the euro. In fact, I showed you this channel right here, the same exact channel off of this high right up here. Okay, this low and this low. So what I said in that video was that if we were going to get a reversal from the euro, this is where I was watching. Okay, and you can see where Thursday, Friday, we tapped right into this area. I mean, it's really textbook if we get the reversal from here, just because this is the exact area that I mentioned. We came up here, we closed the gap, we mitigated this imbalance back here, and now we are potentially looking at a reversal. I say potentially because, again, we do have those US-Iran talks over the weekend, still a lot of uncertainty around that. Could we get another weekend gap? Absolutely. We'll have to wait and see how we open on Monday. But what this is going to come down to is, and by the way, too, I want to show you this as well, because on the daily, you can see this change of character down here, very similar to the DXY. And this is what I meant where I said it's even more obvious on the euro, because this right here, there's no question that we close below here. I mean, this is just a fact of the chart, guys. And I say fact of the chart because there's really no opinion needed here. Nobody can sit here and look at this close and tell me that we did not close below this one back here. And nobody can look at this up here and tell me that we did not close above this high to give us the BOS. So this is down here a change of character. Okay, I mean, the close below here was, let's see, from that low down there to the actual low was like 55, 60 pips. Okay, again, no question that we closed below this. This is a change of character, and this is the first change of character within this entire uptrend that we've seen now for basically about a year and a half. Okay, so in my opinion, that could be bearish for the US. And this comes to, keep in mind, this comes to, as everybody out there is talking about, the dollar being dead again and de-dollarization, right? The petrodollar. And I understand the arguments, okay? I'm not a fundamental trader, but I understand the arguments. However, typically when I see headline after headline like that, and I see a setup like this on the euro, and I see the dollar, the DXY, giving us that bullish change of character on the daily time frame, it does kind of align perfectly, because when I see an influx of headlines like that, typically speaking, that is a cue for the market to go the other way. Okay, I'm not saying that it will. We'll have to wait and see what happens here. But the setup is there. So if this is going to give us a lower high, guys, I'm looking for it to occur around this area that it's trading at right now. Now on the hourly time frame, what I'm looking at and what we talked about in Discord was the fact that we had, very similar to the DXY, two internal BOSs last week. So this one right here, guys, we never actually got the close below this. Like if you map this out, this was a 0.1 pip close below. Okay, and that's just way too close. Like if you snap a level right there to the low, we didn't even close 1 pip below it here. So this was never a change of character. And we talked about this in Discord. So if you got caught off, offside on this, that's the benefit of being in Discord, because we talked about this at the time in real time. And I told members that this right here was not a change of character and a reason to get short. All right, so if we get now the close below this low right here, okay, so basically where the euro is right now as I'm making this video, keep in mind there is still about an hour left in Friday's session while I'm making this. But if we were to get the close below this low down here, then we do have a confirmed change of character on the hourly time frame. And then from there, that could be at least a near-term top for the euro. Now, in terms of targets, in terms of where this market could go, the key distinction here is to understand that this right here, yes, we could get a top forming, and this becomes the top for the euro, okay, to the point where we come down here, test this low, and possibly even lower within the context of this channel. However, one thing you've got to understand too is that we do have this bullish change of character that occurred back here. And then we also have this imbalance, okay? So in terms of targets, this would be my first target if we get the confirmed, reversal, bearish reversal up here, which it's not confirmed yet. But if we were to get that, then this down here, this area around 1.16 would be my first target. And then of course these lows down here and possibly lower over the coming weeks. But let's not get ahead of ourselves. The first thing here is that we need to have the bearish change of character confirm up here. And then if that's the case, what I'm looking at is this right here, this bullish change of character, and the same rules apply from the low down here up here to the high. This right here would be the first area below the 50%. Okay, so if I'm targeting this, if we get the reversal set up, then this down here is going to be my first target. Okay, simple as that. You've got this imbalance back here. Take that out. If we don't get a bullish change from here, then we're likely coming back down here to the lows. Okay, that's only if we get this confirmed though, guys. There's no confirmation here just yet. All right, and if next week we were to come up here and take out these highs, okay, then there is that chance that we come up here and just tag this high, okay, and we just continue within this rally. With that said, though, given what I'm seeing right now on the charts as we head into the weekend, it does kind of, in my opinion, look like we are more likely to get the reversal, but I still have to wait for that confirmation. And last thing too here before we move on to the pound is that there's no shortage of imbalances here for the euro, and the same thing too with the DXY. And by the way, this is that ascending channel that we've talked about before too, right? So you've got this in play as well, where off of these lows and these highs up here, you can see where this channel has been in play now since back here in 2022. Okay, so the market has done this, and we're still up here in the top portion of this channel. But there's no shortage of imbalances here for the euro to potentially target, and the same thing with the DXY. Right, because look back here, you can see where we've got imbalances like this right here. But specifically, I mean, look at this right here, and look how this potentially lines up with the bottom of that channel as well, guys. So I'm not saying that that's what we're going to get over the next year, just because I don't forecast like that. But at the same time, if we were to get a reversal taking shape up here, it would not surprise me at all to get moves down here toward pockets like this, and then potentially imbalances like this down here. Obviously that's a long ways away, guys. I mean, you're talking about 1,000 pips, even from 116. But the point here is that the context is there, right? The structure is there. If we get it, everything from the weekly to the daily, all we need now is that 1 hour confirmation to show us that a top is in place, but no guarantees. We will see what we get on Monday. All right, so let's move on here to the pound, and I'm not as interested in the pound as the euro. I don't think that the structure here is as nice as the euro. There's no clear daily change of character like we have on the euro. This has mostly just been a sideways market, and a kind of messy one at that. However, I will say that if you look at the 4 hour time frame, I mean, the swings here going back to February have been really nice. And just like the euro too, if we get this setting up, so let's look at the 1 hour time frame and talk about this, because what we've had here last week is we basically had the market just giving us this high up here, and then we swept it twice. Okay, so this also kind of makes it a little bit more difficult though to identify a change of character. But at the same time, I do think this low is significant. And it's significant because right now, what this looks like is a liquidity sweep reversal. I call them LSRs. You get the sweep here, you get the sweep here, and then the low, okay, that triggered the sweep, the last sweep, is this one right here. So I do think that if we get the pound closing below, let's see, this level comes in at 135. Okay, pretty much close to right on the dot. 1.35, I think next week, if we close below this, I think we have a near-term top in place. Now, what will be key from there, very similar to the euro, is that just because we get a top up here, right? If this were to confirm as a top, just because that occurs does not mean that we just do this, okay? And we could. But what you have to understand is that we did get this bullish change of character back here, okay? So within this downtrend, we basically had the pound giving us this break of structure down here, making this our external high, and we took that out, okay? So you have to understand too that this has occurred because we can't just ignore this. We have to trade what's on the chart. So my point here, and I said the same thing on the euro and even the DXY, is that even if this were to set up as a near-term top, you have to respect this area down here. So from the low up here to the high, okay, this area right down here. Notice below these lows here at the 50%. Also notice too, guys, how this high now, right, using our fibs, the 50% comes in right here at these lows, okay? In my opinion, that is telling. That is telling because if this were anywhere else, okay, it wouldn't line up with those lows. And markets have a way of doing this. I can't explain it. It's one of those phenomenons, but they just have a way of doing this where they move essentially equal distances beyond ranges like this. Okay, so you get this range here, you have this low, and you have this high, and then you get the 50% lining up right there at the lows. It happens more often than people think. But the point here is that if we get this confirming as the high up here, what I'm watching is this imbalance back here. Okay, specifically really OTE here in this case, right around like 1.33, that general area. This would be a first target because, and the reason it's a first target is because we don't know that, you know, if this were to set up as a reversal next week and we get the pound moving down here, we don't know if this right here is going to fail and just do this, or if this is going to become a higher low, okay? So the last thing you want to do is go shorting a market like this, whether it be the pound or the euro, and targeting, you know, this low down here or lower, and then the market gives you a profitable move, and then all of a sudden reverses, and now you just round trip the trade, because that is super painful. I mean, even more painful than losing or missing an entire setup. So that right there is something to pay attention to, guys. I think this imbalance back here is one to watch if we do get this confirmed setup. Okay, so one step at a time right now. Confirmed setup, this area down here around 1.33, could be a bit lower, is what I'd be watching. All right, so let's move on to gold here, guys. I'm only going to talk about 4 markets today instead of 5. Just because, to be honest with you, apart from the euro and the pound, I don't really find too much else out there too interesting. I mean, the S&P 500 is as well, but I don't typically include it here. I do talk about it in Discord though. So looking at gold, we've talked about this before. Okay, so we've talked about this channel before where you can see that off of this high up here, this high, this low, and then this low down here. So with this low in place, right, we did have the market come up here and give us what could have been a change of character. What I said in those videos though is that in order to confirm this, what I wanted to see was gold move down here and take out these lows and then give us a higher low, you know, off of this one, right? And then that could have been a long for me, but we never actually got that. So there really was nothing for me to long here because I'm certainly not going to chase a market after it gives me a potential change of character like this right here. I can't long this up here in this area because I have to see it move into discount, okay? So right now for gold, I think that the one thing you've got to be careful of, obviously if the US dollar strengthens, right, which I think it possibly could here over the coming days, if that does happen, if we get that confirmed setup, we could get a pullback here from gold. Okay, now the other thing to keep in mind is that back here, we did close below this low, okay? So we got the close, the sustained break below here. So the acceptance below this means that within the context of this current pullback, okay, so obviously big aggressive move up back here, and then we had the market move into, you know, lower highs and lower lows. So within the context of this pullback, we had acceptance below the low. So with that in mind, what we can do, just like we always do, or I always do at least, is I take from this high right up here, down here to the low, and map this out. So you can see right here, we are in premium. Now, the one area though that I would watch is if we go to something like a daily chart. Okay, so you can see that back here, right? This was obviously a very aggressive move. And with this, we had imbalances form on specifically this candle right here. Like this is just one massive inefficiency here for this market, even back here in this area, especially in the lower time frames. So this general area right back here is one that you've got to be careful of if you're long gold, in my opinion. The other thing here too, and this is a little bit more speculative, but if you look at the 4-hour time frame, it does kind of look like this trend here could potentially be getting a little bit exhausted, just in the sense that, you know, from this high back here, you can kind of see where we are getting the market possibly making, you know, or carving out a rising wedge, right? Which could possibly lead to a move lower. Now, the thing is too, you've got these imbalances back here. And in my opinion, this move up is just serving one purpose, and that is really just kind of mitigating these imbalances that we saw back here. So I think that what this is going to come down to is what we get from the dollar next week and really going forward through the rest of this month. And then also what kind of price action we get up here, because from an SMC standpoint, right, we don't even need this right here, because what we can say is that when we look at the 1-hour time frame, okay, we can clearly see that this back here off of this high, you can see where we didn't close above it here. However, we did right here, meaning that this low now, okay, this gap down now becomes a protected low. So if we were to see gold now take this low out, then in my opinion, okay, we have a near-term top. And then from there, possibly we're getting the move down here towards some of these lows like I wanted to see back here in this area following this change of character. So from there, then you get something like this. From the low up here to the high, you get this. And there is still an imbalance below these lows down here in this area, okay? So that is one scenario. If we get the market come down here, taking out this low, we get a near-term top, and then we've got this imbalance back here in this region. Okay, so certainly not off the table. And again, I think you've got to be careful if you're getting too bullish on this market, just because, again, we did take out this low. Okay, so in terms of this pullback, this is alive and well, right? This acceptance below tells you that sellers, in terms of this pullback, do remain in control overall, and that this right here could just be relief before we get a near-term top in place. But I really think too, again, a lot of it's going to come down to what we get from the DXY next week. So I truly hope this video has helped. Don't forget to subscribe to the channel, and also check out the video right here where I walk you through how to identify a change of character and break of structure in super simple terms. So until next week, have a wonderful weekend, and I will talk to you again on Monday.